Hi everyone, this is Michael Ben-Ghiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for January 28th, 2023. Okay, let's get right into it. We got a lot to do this week, and as usual, we're gonna review the current market environment, the stocks in our portfolio, which is now up to 4. So you can already see we're getting some more traction, a little bit. But the market's improving. Otherwise, we wouldn't have any positions, which is what we had for much of last year. And then we're going to go over the stocks in the watch and ready list. Okay, so let's get started. So we've brought up our overall stock exposure up to 25%, and we've changed our strategy from very short-term trading, swing trading, to short-term swing trading. So what's going on here? The money is flowing right now back into the beaten down tech stocks for the most part, which has been concerning because, we're always trying, at least in this service, we're trying to find the next leaders, not the leaders in the past that are, for the most part, broken. So we're looking for the stocks that are not had just made 52-week lows or even all-time lows, and coming up out of that, we're looking for stocks that are making 52-week or all-time highs or very close to that. So these are the leaders that are telling us they're leaders because of the way they're acting. So that's what we're always looking for. We want the next crop of leaders, not the ones in the past, which can be frustrating for some people. I mean, Netflix has already gone up 100% since its lows. And Tesla, made a massive 33% run just in the last week. So it can be frustrating that, well, why aren't we in those stocks? Well, because those stocks you're bottom fishing them. Who knows where the bottom is? Most people, sure, you would have bought this bottom, yes, you'd be doing very well. But if you had bought any other bottom for the last year, you would have been down in some cases up to 60%. And, a 33% run is, not even close to getting your money back. So that's bottom fishing. Nobody knows where the bottom is. And it could all wipe out again and go down much, much, much lower. And some of these companies you think are fantastic can easily go bankrupt. That's how it works. In 2000, I remember waking up every morning and looking and there was just a list of 30 stocks some days, all bankrupt. They were high flyers a few months earlier, and then they were just gone. Amazon went down to $4, if you can imagine that, from 100 and something. And so, I didn't obviously look back in history. Oh, I should have loaded up the boat, but you didn't know because it could have easily gone bankrupt along with the rest of them. Amazon wasn't what it is today, and so you just didn't know. Even in the 2009, 2007, 2009, you were seeing Bank America and Citicorp, mid-single digits stocks, and they could have gone under. So yes, in hindsight, it's very easy to say, "Oh yeah, well look at this. I should have done that." Or, you're not doing this because these are all going up and your stocks are not. Well, you want to use a specific methodology that works over time. And bottom fishing is, you might get lucky, but over time, you bottom fish long enough, you're going to lose your whole account. You'll end up wiping out. That's just the fact. So let's go back to our system here. So that's what's happening. The money's flowing in, but we're getting some money flowing into the upcoming leading stocks, which is good, but we're just not there yet. We're still getting a lot of volatility, and stocks just really aren't moving very much. You're getting one or two here and there that make the nice moves, and the rest just don't go anywhere. So we're not there yet to get aggressive, but we're getting a little bit. So this is it's that make or break spot again. It can go either way. We just Friday, I actually noticed in my own positions, I hit a new low for 2023. Now, very, very tiny, minor low, but you would have think as the market's just ripping up that, all the stocks. But if you can actually look in our watch list, let me go to my other screen here. I think most stocks close lower. So it's a little bit of a bifurcated market. Okay, but let's go ahead and let's get into we'll see a little more detail about what I'm talking about. So let's go ahead and go to our positions. And the first one is Chevron. So this is one we bought. We held through earnings, which turned out to be a little bit of a unfortunate. I wrote about this. They did a little sneaky thing, which is sometimes companies do, and it makes you just wonder. It's just not. It's not maybe not a little ethical. They sometimes come out and they announce good news the day before. So they announced a huge stock buyback and dividend increase, and they got a big pop. And then they came out the next day on earnings. They weren't quite what people were expecting. Now, really, they should have all this done the same day, but they wanted the pop. That's just what they do. Sometimes they'll do the same thing. They'll announce all these great earnings and fantastic earnings and sales, and then they bury in there that, well, their guidance for is that they're losing business. And they do stuff like that. Unfortunate. So, anyways, we didn't get a pop. We got stopped out of half of our position because we had moved our to protect ourselves. We moved half of our stop up to break even, and the rest of it we kept at 167. So the rest of it is actually down here. It's a little hard to see. It's about where this 200-day is. So it shouldn't come down there. We have a pretty good distance. Our stop was about 7%, which was reasonable. But now we actually out half of it at zero. If we get stopped out, we end up with about 3.5% loss on this position, which is completely acceptable. So that was unfortunate. That was just one that didn't quite work. But you never know. It can just come back. Sometimes this happens. It's just that reaction, and then you get a move back up. But a little warning there. What didn't go as we expected. The next one is BP. Now this one acting a little bit better. You can see how we got tightened. The pattern tightened up here. We had a little fake out there, and then we finally broke out, and we just didn't really do much on Friday, but really nothing wrong. Earnings are in 10 days, so we'll have to watch that. We'll probably do the same thing. If we have a decent cushion, we'll hang on to it. If we don't, we might just cut it. Or that's the problem with earnings. We do just earnings can be just treacherous. And it seems like if a lot of people, they hold earnings, that's when you get blasted with a bad reaction. And it seems much less that you ever get one that just gaps up 40%. So that's how it works. The next one is Credo Technology Group, CRDO. Now this one, we actually had a nice move up. We bought it, and we already took half our profits up. I think we were up, 10, 11% offhand. And this one's actually acting really pretty well. You can see the volume is increased. We broke out here, but look at the closes. We came up here. We had a close at the high. We keep coming down, and buyers are stepping up, and we're getting these tight closes there. That's always a really good sign to see. We've broken out above, not quite the all-time high, because this is a IPO from last year, but we're getting pretty close. But this is the highest close. 1731, we higher than this, and this got up to 18 over here in last March, but wasn't able to hold it. So this is really good sign, an increasing volume. It's a small cap, just 2.5 billion market cap. So it looks really good. This could really turn out to be a leader. It's actually a tech stock in the network solutions. So it's one of the few tech stocks that's actually reappeared on our list. For so long, it was just cyclicals and chemical stocks and food stocks, things like that. So this is a really good sign, and we may be on to the beginning of a nice move here. Now, just because the theme up till now has been pop and drop, these just didn't last. You get the move down, and that's it. Here's another one. Try to break out, didn't make it, or it lasts a few days, and then you get So we end up taking half our profit, up about 10% or so, and we'll hang on to the rest of it. And I think our stop now is at break even too. So we're sort of in a free trade here. We took half off. If it comes down, we would get stop out at break even there, and we've still made some money. So that's how we're going to treat this. Ideally, it keeps going, and we'll have a nice long-term winner. But that hasn't been the theme. Maybe it's changing, so that's why we still took off some. Otherwise, if it was a better environment, we wouldn't have probably sold anything, so you can get a bigger move and sell into that. And the last one we just put on was XLB. That is the materials ETF, the Spiders material. This one had a little bit of a sloppy pattern here. It tried to go up, had a big sell-off, came right back, which is a good sign, then tightened up, and we bought it right above here, but we just closed a little bit lower than our buy. Nothing, the volume was low, still looks really good, but of course, on a day where the market's ripping up, we would have liked to have seen a stronger close, but of course we didn't get it. And we're down about 0.5% on that. BP we're up 2.5%, and Chevron we're basically flat on our remaining position. So that's our position. So we're not getting a lot of traction except for Credo. The rest of them are just floundering, and that's the thing. Looking over, I track a lot of stocks. There's very few stocks that are up even 5-6%. There's just not a lot of action. That's the concerning part, that we're just not getting those moves. When we do, and that we're getting that character change, which I talk about in the notes, that means that the whole thing is starting to work and we're getting that easy dollar environment. And that's where you're going to see we're going to really start stepping it up and get aggressive and get 100% invested. But we're not there yet. We're not getting the feedback. The market's always telling you them. You have to be able to listen to it. And right now it's telling you it's not the time to be putting a lot of money to work yet. We're not getting the results. We want to see profits building up, and then some profits we can actually lock in, and then we use those profits as a cushion against future positions. And if we start going in full blast, we want to have that market has to be ripping. That we're putting on positions and they're not testing us, they're just going, and we're very quickly up, 5-10%. It's giving us the feedback that yes, this market it's rewarding your capital. And but we're not there. We haven't been there for a long time. It will happen. It could be this week. It could be, it could fail. We just don't know. So we always work incrementally coming into the market. Okay. So this video is not super long. I'm going to kind of go a little faster here. We only have one stock on our ready list, and that's a little concerning. We should be seeing more, but we're not. And this one broke out of it's Champion X. Their drilling technology and oil and gas has been a hot sector. It's this sector is 14 out of 197. You can see we had a little cup with handle here, broke out, but we closed towards the lows of the day. Now earnings are just going to be, it looks like on Tuesday or Wednesday. On the 1st of February. So this may be one you just have to kind of watch. Some people will play that. If you get a big move right into earnings, you might just take it, but we'll probably be watching this one. So even though it's on the ready list, it's not super actionable just because of earnings. And our long-term outperformer list, we've been watching this CBIZ for a long time. We're getting a declining, the relative strength starting to fall off, which is a little bit concerning. And we've been wanting to buy it right at all the moving averages converge here. That's on the 20-week. And we're just about there, but we're just not getting, we're just continuing to watch it. We don't want to just necessarily buy it there because we can see that it just hasn't really been holding, though we're just kind of hovering around it. And in this market environment, it's just not set up really the way we want to see it. So we're still watching this. It's ready to buy, but a little concerning here. It's one of the best stocks we've seen, but we're still kind of holding off on it. I'd like to see a little more strength. Maybe even if it clears Friday's high would be the time to show that it's got some strength. We always generally try to buy on strength, not when the stock is coming down. We don't like to buy it just because it's coming down. You usually want to see at least it's turning back up and buyers are coming back in. Okay, we do have a number of stocks on our watch list, so let's go through quickly on those. The first is Tencent Music. Now we're starting to see some names here that we haven't seen in a long time. They were nice movers in the past. Now this one, you have to be also careful when you buy these because there's a lot of overhead resistance. This was June of 2021. The stock got up and it just crashed. I mean, it went from 30 to 3. There's a 90% drop. And we're starting to come back here. But remember, these people, this is just, well, we're getting about a year and a bit. So it's starting to be not so much affected, but you still, when you got 2 years, those people are pretty much gone. But we're still enough there that there's going to be buyers that are trapped. They bought it up here, and now they're trying to get their money back out. So you got to be cognizant of that. So let's go back to the daily chart. But we've kind of floated down here. We bottomed out for a long period, just floating around $3 to $5, and we finally broke out above that. Made a nice move, a good 100% move, and now we're above the 200. We're above the 50. Now we're kind of hugging the 21 day, a good sign. So this is one we're looking to buy, but we're not quite there yet. We're very close. Our buy range is actually right around where we are. So we'd like to see that just clear there. But that's one that a little caution on the overhead resistance there. The next one is a company I'd never heard of. It's called Waterdrop. It's WDH. And they're a Chinese third-party insurance and healthcare services company. Same kind of a pattern. You can see this. You can already see when you see the moving average is just trending down. You know this stock, even looking at a weekly chart, was a lot higher. Again, same thing. This just crashed once it came out as an IPO. Really, just came down to $1, another 90% drop, and we're coming back up. Again, this you got to be careful with the overhead resistance, but we've formed some really nice trading of almost like a little pennant here, and ideally it breaks out of this pennant and off we go. It's got some earnings that are starting to appear, which is good, and sales are still minus. A little bit of warning there, but you can see here we're starting to have a breakout year in terms of, last year we were negative earnings and we came to positive earnings in 2022. A little bit of a drop here in 2023 that's projected, but it is bottoming out. Now this is a speculative stock. It's a $3 stock, so not one we usually like to put on because there's just really a lot of funds that, you want the institutions coming in and buying these stocks. Many of them cannot buy this because it's under $20, and many funds won't buy stocks under $30. So there are smaller numbers of funds that will buy these, but they're usually specializing in low price stocks, which are always considered to be lower quality. So this is one we're watching. This is one I would probably trade if it just blasted off and went up, 50%. I'd be saying goodbye to it, unless there's some kind of fantastic news. But you can see as it's starting to go up here, we're getting a lot more trading volume. So again, but it's risky. You'll see bigger moves in these, and they get more volatile. It's not uncommon for a stock to just drop down 20% and then come straight back up. So that can be a little frustrating when you're in these, but it's definitely not the quality company that we're normally looking for. Next one is Manchester United. This one, it's got a lot of rumors of it's going to be sold, or it's starting to hang out a little too long here in this tight trading range. I think we might be taking it off the list. It might have just already made the move on these rumors. It's been hard to find exactly what the news is. Maybe it already has an offer, and that's why it just kind of trades within a tight range. So this is one we're starting to question the stock, and so this will probably go off our list soon unless there's some definitive news. Okay, the next one is Bel Fuse. This is one kind of came up on our radar because you can see it's starting to really make a nice move and acting very strong. And a couple times we've had this. I don't remember if we bought it, but the time it looks like, oh yeah, we should have just bought it here. And yeah, it's always in hindsight. It's easy to say, that's what you should have done. But we're starting to get another cup forming over here, and we're trying to buy it breaking out above this little area here. But this is it's a small cap. It's just not even $500 million, 452 million, but money's starting to flow into it. And let's look at a weekly. Let's go to a monthly first. So it's been one of these stocks just chopaholic, sometimes we call it, but it's starting to get up. Well, it's back now where it was running into problems in 99, in 2004, 2006, but that's a long time ago. But we've now broken above. This is the highest for many, many years. And it's looking strong. Volume's now picking up. So there's something good going on with this company. And they're providing basically electronic parts. So, but it's looking really pretty strong. Earnings been really now starting to go into triple digits. Sales have been increasing. So there's good stuff going on here. Even though it's a little thin stock, though. It's only 60,000 shares that it trades a day. So you got to be really careful. It's not one that you would pile in with a lot of shares, but it is acting really pretty well. So it's back on our radar. We'd like to buy it over there. That's one I've been watching for a while. Just hasn't given us really any way to buy it. Again, you're starting to see that we're seeing more of these small caps, and it's unfortunately some of them like this. Another one, Genie Energy, very light volume, so you have to be careful. You'll get just sometimes big spikes out of the blue. You can see over here, just, that's enough just to kick you out, and then you get frustrated because it breaks out and then wham, kicks you out and goes straight back up. Here's another one, wham, and then comes back. So here we're watching it, looking to get in 1104, right above this little congestion area, but we're kind of getting down a bit now. So we're just watching it, but it is starting to tighten up. Maybe we might even be able to get in a little lower here. We'll change our buy if this tightens up, gives us a little clearer picture. But it's looking strong. It's on our radar. Next one is AMPY, Amplify Energy. Again, we're getting a lot of. This is another lower price stock. Genie Energy, the last one too, under the $10 stock. This is a $9 stock. That's what we're getting. That's what we're given. So a little on the lower quality. So again, we're trying to. This one did break out of this tight area here, but came right back in. This was on our ready list, came back in. So it's just we're seeing a lot of this. Just the breakout attempts, and they don't really work. But this could just tighten up again. That's why we're watching it. Next one is one I hadn't heard of until recently, BBSI, and that's Barrett Business Services. Again, another under $1 billion market cap, only 50,000 shares it trades, but acting really well, and it's a higher price stock. So this is just one that's not on people's radar, and they're a permanent and temp staffing services company. But this is one that just is doing really, really well, and it's been around for a long time. It's starting to really make a move, and it's off most people's radars. Now, sometimes when you get these stocks, because they're off the radar, they can make really big moves without really any institution. Like, a lot of people don't know about it, and the institutions don't follow it, analysts don't follow it, and then suddenly people go, wait a minute, look at this stock. It came out of nowhere, and it's up 200, 300%, and then they start getting into it. And then when that happens, that's a lot of times, if you had been buying it down here, you're starting to sell out to those people that are coming later to the party. But this one too, it's getting some nice tight action. It's got a little cup forming here, and we're not quite there yet. We'd like to see it break above that area there. Another one is ESE ticker, and that's ESCO Technologies. Again, same theme. Not a lot of shares traded, but the stock is starting to act really, really pretty well, and we're trying to get in right above this little tight area. It did try to attempt it on Friday, wasn't able to go. And then, of course, we have XLBs on this, which is we do have a position, but it broke down from its ready, and it's back on the watch list. That's it. So you can sort of see the theme. This is what we're always trying to look for. We're getting names we've never heard of. Some of them are low price, a little riskier. Some of them are a little better quality, but low volume. So you got to be a little careful there. But overall, I'd say the picture it's improving, and we're just not quite there, as I mentioned earlier on. So we're putting on a little more exposure, but we're ready to cut bait and run if need be. But hopefully we get it improves. maybe this next week, and we're able to really push it and get some moves. But the indexes are at a kind of a crucial point. We talked about in the market trend advisory video. It can go either way. We're sort of stretched now. We've got to areas on the indexes where we've pulled back all last year. So it's a difficult time. So just don't get emotional. Put on the appropriate amount of exposure. We're still down at max 25%. That if it all turns around and fails, you won't get hurt. You'll be out. But we have enough exposure that if it continues on, we're already in the game. So, okay, that's it. So we will be back next week, and hopefully with nice our positions rocketing higher, and we're all making some money. Okay, all right, thanks a lot. Talk to you next week.